Good morning, everybody, and welcome to this week's Motor Trade Radio podcast in association with eBay Motors Group. It is Saturday the 29th of February, and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. Did you really say the 29th of February there, Phil?
Leap year. We should have actually researched what happened 4 years ago on this date, shouldn't we? So
we should have done, if we'd done a bit of research and a bit of homework, we could have done that. Good idea.
We'll find the podcast.
We'll do it in 4 years' time.
I'll tell you what, should we find the podcast that we actually published on the 29th of February 4 years ago? That would be an interesting one to find and promote, depending how it went.
Yes, let's dust that one off and put a link up for it.
We'll have a look at that one. So we've got a busy headlines this week and an exclusive interview as well, haven't we, Curtis?
We have, and we're going to start with a bit of a shout out because there was coverage during the week about the Sunday Times best companies to work for. So the full story's on AM, but we thought it'd be worth just giving a shout out to the companies that made the top 100 list. So number 14 was Udall Car Finance, Toyota GB, number 15. Porsche Retail Group, they were the highest rated dealer in the top 100 at number 42, and Motorpoint were rated number 100, so just in there. But also at the same time, Sunday Times published the top 25 big companies to work for, and at number 20 was Truss Ford. So well done to everyone. There's a really, really good showing.
It was, and we mentioned it in a bit, but Stuart Folds has been on the podcast recently as well, hasn't he? So, and you can see where fantastic growth there for Truss Ford, and to be in there in 20th position.
Yeah, they'll be very pleased with that because that's actually the 5th year in a row that they've been rated, and it is not easy to get into those ratings, let alone stay in them.
Exactly. And at the end of the show this week, we have got Mike Allen, who joins us. He is the head of research at Zeus Capital, and he's given us a sort of a fresh sort of overview of what he found over in NADA, didn't he? He's been over in NADA recently with some of their sort of looking at some of their best practices and some of the trends that he's noticed from the Las Vegas NADA convention that it was this year. And it's been great to have Mike on at the end of the show there talking us through some of his overview.
Yeah, there's some really good insights there because people who haven't been to NADA, some are a bit sort of suspicious. What's it all about? What's the point of going all the way over there to find out about how the Americans tackle car retailing? But having been there a few times, it is such a good insight, and it's so well supported by UK retailers and suppliers. So do stay tuned for that because there's some good insights there from Mike.
Exactly, and he joins a long list of recent interviews that we've had on, such as John O'Hanlon, Dash Gupta, Robert Forrester, and as we said earlier with Stuart Folds there, and we have got some more lined up, haven't we, due to just come on the podcast and be interviewed.
We have, stay tuned over the next couple of weeks. We've got some cracking interviews coming your way.
And last shout out, really, we are in our 5th year of the Motor Trade Radio podcast. It started in June 2015, and it's a big shout out because actually we were just crunching some numbers, weren't we, this week just before the show, and our downloads just from a year to date perspective is up 57%, so we are actually growing year on year.
We are, we're really pleased about that, and we do thank everyone for tuning in and for your support and for sharing on social media. So, anecdotally, I talk to a lot of people who listen to us, and it's interesting to find out where they listen to us as well. Be it whilst they're having their breakfast on a Saturday morning. I was talking to one listener only yesterday who listens to us whilst going for a run. In fact, let's give him a shout out. That's Richard Alcock from the motoring website.
Yeah, fantastic. So we better head over to some headlines now because we've got a busy show this week, haven't we? And some very interesting headlines to go through.
We have, yeah. So we're going to start off this week with an update on that story that we discussed last week about Ford reducing its dealer network, and it's really the aftershocks of that and what will happen on the after sales side of the business. Inchcape, we've got their profits down, retail profits down. Volkswagen, they've achieved the highest search conversion rate according to some research by Honcho. Kazoo, we've got an update on what their activities are and really their aspirations to become the fifth biggest used car retailer by 2025. Car dealer confidence has increased following Brexit, according to some research. We've got the used car market at its strongest level in February for 8 years. And we've got some research from Cox Automotive on fleet volumes and how they've risen 42% in the last decade.
So the first story, and you mentioned there, Curtis, that the story we talked about last week about the announcement of the reduction in outlets through the Ford network in the UK, and this is followed on this week from AM, and it's a bit of a tongue twister of a headline, but
Good luck.
Yes, thank you. Change of after-sales contracts demanded by at-risk Ford dealers, and this is basically that, as we said last week, that they're looking at reducing their franchise outlet in the UK, but actually looking at switching some of the operators from a new car retailer into after sales operators. And I think there's been a bit of a pushback from some of these because they're demanding that's fine, but they're not going to do it under the current contract terms, is what AM are talking about, isn't it?
Yeah, you're absolutely right. So this story is the Ford planning to close almost half of its 400 UK dealers by 2025. Now, I don't think this has come as any surprise to the Ford network. I was certainly hearing mutterings of this at the tail end of last year, but what's happened is the announcement has been made, and dealers have been told at a conference this week. Now, what Ford have been saying is that they would like to retain a number of those 160 to 180 sites as authorised repairers. Of course they do, because they have a sizable car park, so they would like to retain relationships with those dealers for after sales and indeed used car sales. And apparently there's been a bit of a kickback from dealers saying, well, okay, if that's what you want us to do, we're not going to do that on the existing after sales contracts. So it is kind of back to the drawing board here. Ford have got to come up with a compelling proposition for these dealers who they're effectively axing.
Yeah, it's going to be interesting to see what they come up with, and actually what is the issue with the current contracts that are in place. And I presume it's all about standards and investment and things like that. It being in the retail dealer world, that there'll be certain standards that they have to adhere to, which I suppose when you've got a franchise above your door and new car side of it, then you're quite happy to adhere to them. But actually, if you're an after sales operator, then maybe that's some of the pushback there, that they don't want to sort of have that same level of investment and CI requirements that you might need when you're a new car retailer as well. So again, we're surmising there a little bit, but it'll be interesting to see what the pushback is and actually what Ford do in reaction to this.
Yeah, and the next headline comes from Auto Retail Agenda, and it's Inchcape's retail profits drop in UK and Europe. So profits within Inchcape's UK and European retail operations fell 0.6% in 2019 to 17.5 million on turnover that dropped 1.6% to 3 billion. But however, the figure Dub's trading profit in the group's annual results included a one-off contribution of £9 million from the disposal of Inchcape Fleet Solutions, which we covered last year. Now, Inchcape, when they do report, it's very difficult to break out UK because UK is very much bundled in and part of the European figures. But interesting update there from Inchcape.
Yeah, and I mean they've had a bit of a turbulent time up the Inchcape over the recent year or two, and again it'd be good to see this start to settle down for Inchcape in the UK. And like you say, it's only more recently that the UK have actually been cited in some of the reports coming out of Inchcape, because it was very much sort of the international content rather than just the UK and the European market generally. But again, it'd be great to see them sort of settle down and get a little bit of stability in the UK market, because they are a good sized operator over here in the UK, and they've got some good franchises within the group. So we'll see what comes from this one.
Yeah. Now, next story is from Motor Trader, and the headline is VW achieves highest online search conversion rate. So this is some research carried out by Honcho of search to conversion rates over the course of 2019 and how it compared year on year. So Volkswagen achieved a conversion rate of 4.3%, which was based on a grand total of 4.65 million searches, which sounds pretty impressive. But I mean, these are big numbers, but they were actually down year on year. So that compared with a conversion rate of 5.7% from 3.55 million searches in 2018. So I've never seen these conversion rates expressed before. So interesting piece of research, and of course there's a top 10.
There is. Yeah, it's interesting that, because obviously back in 2018 was a tough time for VW, as we know, with the Dieselgate at the time going on back in 2018, and now they've sort of recovered from that. But again, to still have that great conversion of 5.7%, dropping to 4.3, it's a bit of a drop there, but obviously from a huge figure of 4.65 million searches, though, isn't it?
You want to know who's in the top 10, don't you, Phil?
We do, yeah.
Yeah. Okay, here we go. So according to Honcho, number 10, Hyundai, number 9, Seat, number 8, Skoda, number 7, Citroen, number 6, Renault, number 5, Land Rover, number 4, Mercedes, at number 3, there's Vauxhall, number 2, Mini, and as we said, number 1 was Volkswagen.
Is it a surprise to you that BMW are not in the top 10 there?
Yes, yeah, very much so.
And Audi, BMW and Audi are both sort of not missing there in that top 10 there. So you've got your Mercedes, you've got your VW, but you haven't got BMW and Audi in there, interestingly enough.
Yeah, but a very strong showing from the VW group otherwise, because Skoda and Seat are there.
Exactly. So moving on to the next story, and this is an interesting one. That's a great story from Car Dealer magazine in the first place, isn't it, Curtis? I mean, it's a very, very insightful. I mean, the first bullet point is leaks pack reveals Cazoo's plans to sell 217,000 cars by year 2025. So, and this is talking about Cazoo. So the story is alluding to that Car Dealer magazine have managed to get hold of a investor pack from Cazoo and run a story on it in terms of the sort of shares some of their aspirational volume growth here in the UK, and some seriously big numbers there, isn't there, Curtis?
Yes, yeah, there are. So the investor pack, as you say, was leaked to Car Dealer, and within it, Cazoo is predicting it will sell 217,000 used cars a year by 2025. So these are big numbers.
Yeah. I mean, you look at that, and in fairness, Mike Allen is actually quoted in the piece there that he's saying that Kazoo's numbers look very ambitious, and that clearly these numbers, if these numbers are achieved, this will be a very valuable business, but it looks to be on the ambitious side. So, again, looking at their growth numbers, because they do quote the growth numbers in there, and they're talking about the first year that they will sell 12,375 used vehicles. Year two, 24,000. That's jumping up to 46,500 in year three. And then this is where you get the real growth then in that sort of year three to year four, because they jump straight up that in year four they're predicting to sell 112,500 vehicles, and then year five comes the figure of 217,000 vehicles, and that'll make them a hugely significant player here in the UK, won't it?
Well, yeah, because they will actually, if they do achieve those figures in 2025, that will account for 5% of all used cars sold in the UK, and it also assumes it will be making an average of £1,500 profit per transaction. So I agree with Mike. It is hugely ambitious, but it's worth pointing out that Kazoo is led by Alex Chesterman, the founder of Zoopla and Love Film. So he is a serial entrepreneur. He's raised more than £80 million in funding since launch in December 2019. So we're going to watch this one with interest.
I'm sure some of the listeners in today, and we're going to go on to some of these stories at the end here with the current used car market, who are looking to try and find stock, trying to find product. We've got the demand at the minute, but actually the product supply isn't there in oversupply at the minute. So people listening to the podcast this morning are going, that's great, but where are you going to get all these cars from to sell 217,000 cars? Because, we know how the used car market can be. We saw what happened last year with cap HPI trade value movement in mid-year. I wouldn't like to have that many vehicles around me as an asset at the time where there is these fluctuations in trade values of vehicles. But again, one that we and everybody else will be watching very closely as we move through time.
So heading over to City AM, who they might be making their debut on the show today. I can't remember talking about them before, but City AM, so it's the free paper that's circulated in London. And the headline is "Car Dealers Confident for Coming Year as Brexit Fears Dwindle." So this is based on some research carried out by Close Brothers Finance, and it found that 2/3 of dealers, so 63%, described themselves as very confident. And this is research that was undertaken after January, after Brexit, and it's kind of it's putting Brexit to one side, and dealers and indeed most of us can actually start forward planning now. So this is welcome enthusiasm, and we were interested in this story because it's very much a sort of consumer facing story. This is read by potential car buyers, so it's good that message is getting out there, that there's a bit more confidence than there was certainly last year.
No, I agree. I think within the trade we're talking about, refer to it as that Boris bounce. We've seen what happened with we've talked about it on the podcast with the consumer and business confidence growing since December. We've seen the uplift in January and February. So again, it's great that actually we're looking at the automotive sector, but in the eyes of the consumer, as you say there, that it is a lot more positive. The dealers are positive about it, the consumers are positive, and there is growth and investment in place there. So Sue Robinson is quoted in there, who's the director of the National Franchise Dealer Association, and they're welcoming the figures, and that it's crucial for the government to avoid any tariffs on the industry when it negotiates the trade deal with the EU. So again, thinking ahead of what's coming. But actually, for the minute, it's great and welcome news to the industry.
Yeah, and Motor Trade, the next headline is used car market sees strongest February in 8 years. So a couple of really good positive stories there. So this is based on research by CAP HPI. And so demand from trade buyers drove overall used car values to increase by 1.1% in February, marking the strongest showing for the month since 2012. Now, I know this is something you follow closely, Phil. So what was your take on this?
It's good, it's positive. I think, reflecting on what we're seeing within the Cox Automotive and Mannheim sector, that there is strong demand out there. We mentioned it recently on the podcast that January came out to a very fast start, kind of didn't slow down at the end of December, straight into the new year. Luckily, I mean, we've had the bad weather with the floods, but actually we've had none of the heavy snow on the ground yet. Still time for that, I think, looking at the weather forecast. But again, it's kept that demand going. I think the challenge is getting that supply through. But again, CAP HPI point out some of the strengths there. So Jeremy Yeh, who's the senior valuations editor over at CAP HPI, he's talking about the strength in that small to medium sectors remains a very desirable product and highly sought after at the right age, at the right price, and anything that's got that sub 10 to 12,000 price point, and you can see that this demand on the retailers forecourt for that sub 10, 12, 15,000 pound car is still very, very desirable, and as you say, moving a 1.1% up at the 3-year 60% mark for March. That puts the year to date at 1.5, and actually that aligns to when we last saw an increase year to date at that figure, which is back in 2012, which again year to date was 1.5%. So since then we've seen a downturn year to date. Last year down 3% as a year to date, but great news that we're seeing that 1.5% so far as a year to date. So sort of reflecting what we're seeing in that supply and demand market at the minute.
Now, you've been listening to the Motor Trade Radio podcast in association with eBay Motors Group, the only weekly podcast serving the car retailing sector, and available online at motortraderadio.com and by subscribing on Apple Podcasts, Google Podcasts, Spotify, YouTube, Deezer, and SoundCloud.
Great. So we're just heading over to the last story before we head over to the interview with Mike Allen there. And I've been sort of crunching some numbers and looking at the fleet market, and we talk about fleet a bit in terms of the challenges in that fleet market. We mention every time we see the new car figures, don't we, Curtis, around
yes.
the fleet and business sector in terms of that new car market. But actually, when you start looking at that fleet top 50 operators that's published in the FN50, they actually have grown in the decade. So you look at back 2009 to 2019, and the sector has grown by 42% in terms of its overall volume of vehicles, and that's really down to the growth of that consumer market for some of these operators and new entrants such as Free to Move that are now in that sort of FN50 place as well.
Yeah, this is interesting because I mean my background before I was on Motor Trader was in fleet. I edited Company Car magazine, and this story interested me in particular because ever since all the time I was in the fleet sector, the talk was about fleet sector getting smaller and smaller. But these figures show that the fleet volumes have actually increased. But there's an influence here from B2C as well as B2B, isn't there? Because we're talking about the top 50 leasing and contract hire companies across the UK. But there is a bigger share now of consumer within their business.
Yeah, so you look at people like Lex Auto, VWFS, Alphabet, people like that, and actually we talk about Zenith as well in this, and it's changing, it's evolving. Where back in 2009, it was pure fleet, pure contract hire, pure lease, pure fleet product, and really that's now evolved. We've got subscription models, we've got flexible rental in there, we've got personal contract hire in there. The opt out that a lot, business opt out now that a lot of businesses are giving to their employees. It's changing, it's evolving, but actually what interests me was when you look at that as a fleet market, it's still many of the same operators and new entrants, as I say, with people like Free to Move coming into and others, that the risk, the asset volume is still there and higher. Just short of 1.7 million vehicles on risk on assets with these businesses, and it shows how the sector has evolved through the decade, really.
Yeah, and you mentioned Zenith there, and of course, they're aiming to go 100% EV, which is a bold move there, and it just shows the way that market is changing.
Yeah, you're right, and they say Zenith quoted recently that they're going to move their whole fleet across to 100% EV by 2025, and that's at the minute 10 years ahead of the government deadline of 2035, and possibly they're looking at bringing it forward to 2032, aren't they? So again, shows how these fleet operators are thinking ahead and building their strategies for the future. So that segues us nicely into heading over now to the interview we mentioned earlier with Mike Allen from Zeus Capital, who's going to share his views on his key findings and overview of the recent NADA convention over in Las Vegas there. Well, welcome back to the podcast, Mike. Good morning.
Good morning.
So, just obviously, you've been on a recent visit to NADA this year for 2020, and obviously, you wanted to share some of the observations and key findings from your visit. But for some of the listeners this morning that have really never been to NADA, and obviously they'll see people, they'll see things in social media, but actually, do you want to just share some of your thoughts around why it's relevant for the UK car retailer sector to visit NADA and why they do make such a big thing about going and visiting the show?
Yeah, sure, no problem. So, NADA is an annual event. It takes place around various locations in the US. It's an absolute vast show in terms of trade stands. So you get a detailed look at the complete supply chain. There's manufacturers are there, auction houses are there, tech startups are there, finance companies are there, dealers are there. Key technology providers and system integrators are there as well. So you can really get a very holistic view of what's going on in various segments throughout the supply chain. They also have speakers as well, high-profile speakers. So it's always interesting to see what NADA are saying in terms of US market outlook. The AutoNation CEO was talking as well. David Cameron was there. And then you have some industry thought leaders who also give their views on the market too. So, from my point of view, I've always got good ideas from NADA. I've always had good ideas interacting with US companies. And I find it particularly useful because I interact with quite a lot of US investors as well, because they've been interested in the UK dealer sector for some time, given where the share prices are. So it's useful for me just to get a real appreciation of how their dealer groups are going, how their economy is performing, so I can put it in the right context with some of the UK businesses as well.
Yeah, and Mike, like you, I'm a sort of fellow NADA veteran, and it is a mammoth event. It's absolutely enormous. It's kind of the scale of a European motor show, plus the speakers sessions. So, and that's all crammed into really 4 days, isn't it? So it's a lot to get through. So in terms of this year's event, what were the standouts in terms of the speaker sessions and indeed the expo itself? What actually impressed you?
Yeah, there was quite a lot, to be fair. So, I mean, I think that it was interesting what AutoNation was saying about the focus on parts and used cars this year. True Car unveiled their new brand, and they're going to be launching some interesting product features during Q3 this year. Spin Car had some good demos. Cars.com unveiled a new digital video marketing strategy for dealers. So there's a lot of product unveiling going on at the show. And then within the speakers, the standout for me was Glenn Mercer, who's well-known, the well-known US industry speaker, and he was looking at the future of dealerships, through to 2025.
So in terms of just sticking with that bit there, in terms of anything from the US retailers that you feel are doing better than the UK counterparts, or are we ahead in certain areas? I mean, you talk about Glen there, and they've got the same things, similar things going on with EV and AV technology entering the space, and slightly different over there. But how would you compare sort of US retailers to UK retailers at the minute?
I don't think you can make a clean like-for-like comparison between the two, because the US dealers do benefit from having greater scale, and I think the NADA industry body as well does allow them. There's less competition in various areas, so I think the profit metrics due to scale are difficult to replicate in the UK, in my view. I mean, obviously, the market is facing the same perceived kind of disruptive changes that people often refer to. And when Glenn was talking, it was interesting that, people's forecasting on autonomous cars has been scaled back. Making money from connected cars has proven difficult. I think when you look at the electric market, the near-term forecasts have been upgraded there, so they expect 6% of 2025 sales to be electric, and the supply push around the world is fairly obvious as well from the OEMs, given the fines that they could face if they don't change the emissions, etc. But I think then the US market is going to be different. I think the US will be slower to adopt electric cars, and there's a few reasons for that. I mean, clearly, gas prices there are lower. There's a preference for trucks there as well, and I don't think the subsidies from the government are as good from the US versus the EU and China. So, as ever, there's always nuances, but it's interesting just to hear about various views on potential disruptive forces coming into the global market.
So, some interesting points there, Mike, on electrification, because last time I went to NADA 2 years ago, that electric was barely mentioned. There was sort of no presence in the expo itself or the speakers sessions. So sort of fast forward to this year, how much talk was there about the issues surrounding the move towards electrification and how it's going to impact retailers out there?
Yeah, there's definitely more talk, as you'd expect, given we know that the supply is coming. It's interesting because Glenn dealt with the same question that I often get asked as well, in terms of what's the medium-term impact on dealer after-sales profitability. And I think everybody is coming up with this, potentially 40% lower service cost to the consumer. Therefore, that's the number that might hit the dealer's bottom line, or that's what they've got to kind of contend with. I think people are just comparing the kind of the service costs of an electric car versus an ICE. Yeah. But I think what Glenn was also saying is, and we totally agree, and we presented this as well, is electric is going to take time to change the whole car park in these markets. It's still a huge opportunity. There's probably, there's potential for electric service plans, etc., to smooth out the earnings. And, obviously, the larger dealers probably will have to go for the independents a bit more as well to offset that pressure. So I think, clearly that is a kind of medium to long-term threat in the business, but there is other things dealers can do to mitigate that.
Yeah, no, you say there is the short-term opportunities. I mean, the UK alone is still a 35 million vehicle park, so it's you say we've got that growth of EV alternative fuels coming. We know that, but like you say, there's still a huge opportunity in the short to medium term in terms of opportunities of that after-sales growth still to come. So Mike, it's been again absolute pleasure, and I know we've kept it sort of fairly short and brief in terms of that high level overview of NADA and what's being talked about over in the US there. So it's been again, thanks for coming back on and sharing some of the thoughts on it. Just before you go, I mean, we've got this week's and finally, and it kind of segues quite nicely into that discussion there around electric vehicles. So if you don't mind just staying on, we'll just stay on and have a chat about this week's and finally, which we're actually returning to car scoops for the second time on a story that Curtis has found on there. And this is quite interesting because the story is it's quite a long headline, but tow your own batteries, French startup trailers to eliminate EV range anxiety. So what's your thoughts on this one, Curtis, to begin with?
Well, I had to check the date on this because I thought maybe it was an April Fool's, because it leads with a photograph of two Zoes parked up with these trailers or tenders on the back.
Yeah.
Small, they've only got two wheels, but they've got a battery pack in them. So you read the story, and it's a French startup company who have come up with one solution to range anxiety. So what you do is you attach this trailer to the back of your EV, and it gives you extra mileage. You're effectively towing around another battery pack.
Yeah.
And what they'll be doing is distributing these along popular holiday routes. So the idea is that you actually rent this pack. So you're driving along, you're running a bit low, you go into a compound, get one of these packs and go on your way. So it's a very French solution, I thought. What did you make of this one, Mike?
Yeah, no, I thought it was quite French, to be honest with you. It's a very novel idea, and we spend a lot of time in France over August, so I didn't quite discount the idea just in case I had a mishap on the motorway in my French car. So I've taken down the number just in case I need it in the summer.
I don't know if you noticed in the story, but the original thinking was to actually put an engine in the trailer, so presumably to push the electric car once it runs out of charge, but they did discard that.
So you run around in the electric vehicle and you plug in a combustion engine just in case you get a little bit short. I mean, your first thought is around the power banks for mobile phones, isn't it? Which we know are getting bigger and bigger because you want that sort of extra charge. And actually now, and I can speak for myself here, I've actually got a power bank that I actually think is, in terms of weight and capacity, bigger than the actual mobile phone that I'm charging. And as always, it's kind of when you do need it, somebody else has not plugged it back in again and recharged it after using it. And you just wonder how that will work with this sort of idea as well.
Yeah.
It'll never catch on, or maybe it will.
You never know, do you? I mean, it's quite interesting when you look at the image and you've got that Zoe going down with the tender on the back outside the Tesla plant there on the left hand side. So yeah, quite an interesting one. But I think again, it's overcoming this anxiety, isn't it? That's the thing with this, and we've got the problems in the UK in terms of the network structure, and we're talking about EVs all the time, and it is coming. It's huge. It's on its way. But again, as you say there, Mike, I mean, there seems to be a more adoption now to it around that EV. I think you're right from what you talked about earlier around the Glenn talking over there in NADA, that autonomous vehicle and the connected vehicle now is being pushed a little bit further back and focuses on that shorter term EV world, isn't it?
Yeah. I think the supply is definitely there. I think it depends on how good the incentives are to stimulate demand. I think the incentives have to be good, and then I'm sure it'll work.
Definitely.
Well, Mike, many thanks for joining us today. You've been listening to the Motor Trade Radio podcast in association with eBay Motors Group, the only weekly podcast serving the car retailing sector. Many thanks for tuning in. Do join us again next week. Until then, it's goodbye from me.
And it's goodbye from me. And goodbye from you, Mike.
Goodbye. Thank you.